a 1-minute read of on-chain data, capturing the 24-hour global crypto dynamics. Bitcoin plummets to $66,000. Whose fault is this significant drop? Cryptocurrency markets' March financing volume increases dramatically. Which sectors are attracting the funds? Bitcoin block reward soars. NFT market heats up with divine support. Polygon takes a stand, rejecting Layer 3 to staunchly defend Ethereum's security. SEC accuses Tron of being a security. Justin Sun vehemently denies and demands dismissal for lack of evidence. Exploring Ethereum's synthetic USD stablecoin project. Athena, remeasuring the world with cryptocurrency, mastering the 24-hour wealth code. Let's get rich together.
April 2nd, Tuesday, how is the crypto industry? I'm Zhu. Last night, the cryptocurrency market faced another heavy blow from Grayscale's GBTC with an outflow of $300 million. Although BlackRock took over an inflow of $166 million, its capacity to absorb was limited and couldn't withstand the huge selling pressure brought by Grayscale. The net outflow of Bitcoin spot ETF reached $88 million. Grayscale's GBTC seems unwilling to wait for further breakthroughs in Bitcoin, significantly increasing selling pressure each time it touches 72,000, with more than $500 million in liquidations in 24 hours. By 1:30 p.m. today, Bitcoin has fallen to 66,000, with its market value plummeting by nearly 30 trillion to 0.95 trillion, maintaining a high market share of around 52%. Next, Bitcoin needs more funds and time to accumulate and digest chips. Over the past week, USDC's total market value rose from $32.2 billion to $32.6 billion, increasing by $400 million. However, USDC's net inflow of funds significantly decreased by 73.3% compared to $1.5 billion the week before last. Looking at USDT over 7 days, USDT's total market value increased from $104.2 billion to $104.8 billion, an increase of $600 million, with a slight decrease in net inflow of funds compared to the week before last. Currently, due to the resistance and selling pressure above $70,000 for Bitcoin, the market is either continuing to shake out and digest sentiment, or continuing to accumulate chips and gather strength for a breakthrough. In March, cryptocurrency project financing saw a slight surge, with the amount soaring from $762 million in February to $1.161 billion, an increase of 49.89%. A total of 183 financing projects and 3 acquisitions occurred in March. The average financing amount per project was about $10 million, a significant rise of 38.26% compared to the previous month. Over the past year, crypto investment funds have mainly inflowed into infrastructure, public chain projects, and centralized finance (CeFi). Infrastructure mainly includes the construction of major public chains and second-layer ecosystems, Bitcoin second-layer network, Solana, Sui, base chain, Axure. Most represented in the CeFi track is RWA, the tokenization of real assets, especially real estate and securitized RWAs being the hottest. This also indicates that the public chain market will face a reshuffle. With the surge in Bitcoin applications, the mining revenue has seen an explosive increase, bringing smiles to miners even in their dreams. Recently, Bitcoin miners received a substantial reward of 8.595 BTC at block height 837090. Specifically, during the memory block of Bitcoin, a high reward of 8.595 BTC was recorded, including gas fees of 2.345 BTC, which is more than 10 times the user value. This significant reward was claimed by the well-known mining pool F2 pool and distributed to all Bitcoin miners in the pool through the PPI system. This news set the Bitcoin community abuzz, with miners celebrating and rejoicing as if the gates of wealth had swung open for them. So why did the Bitcoin block reward suddenly spike so high?
According to on-chain data, memory blocks displayed in deep red on this blockchain are mostly marked as inscriptions, indicating that inscription-related transactions may be the primary driver behind transaction fees. Data shows that in March alone, Bitcoin's on-chain NFT sales surpassed $500 million, setting the second highest monthly sales record in history, second only to December 2023. Unlike Ethereum, the Bitcoin protocol does not have a burning protocol like EIP 1559. So all the benefits of the congested ecosystem will go directly into the pockets of Bitcoin miners.
Firstly, the appearance of this high reward is not a coincidence with the widespread adoption of Bitcoin applications and the increase in on-chain transactions. Transaction fees have also risen significantly, and miners, as the crucial force maintaining the Bitcoin network, naturally should enjoy the fruits of this growth. Moreover, with the Bitcoin halving event approaching, miners are under pressure from potential earnings declines. Therefore, they are ramping up their efforts and purchasing more machines to face future challenges and not miss out on the big next Bitcoin mining opportunity. In the crypto world, who wouldn't want to be the hero leading the trend? However, Mark Barron, CEO of Polygon Labs, made a surprising announcement that Polygon will not develop Layer 3. It's known that Layer 3 is a hot topic nowadays, with many projects eagerly entering this emerging field, hoping to get a piece of the pie. Yet Polygon chooses to not go against the current. Why is that?
Mark Boyron, CEO of Polygon Labs, tweeted that Layer 3 will only capture value for Layer 2, which is not beneficial for Ethereum's development. He stated that Polygon will not develop L3. In other words, if all Layer 3s are built on a certain Layer 2, Ethereum will lose its value as a foundational public chain and may even face security risks. However, even if Polygon doesn't develop L3 compared to other competitors, Polygon still has the capital to establish itself firmly in the modular and Layer 2 markets.
However, Polygon is not just a project with empty promises. On the contrary, it has achieved notable success in the Layer 2 field. From the L2 construction framework CDK to the integration of cross-chain liquidity protocol, Polygon Aggregate layer, and its own data availability layer, Avail, Polygon has built a powerful Layer 2 tool suite ecosystem. These tools not only help developers build Layer 2 applications more efficiently, but also enhance Ethereum's performance and security. Some question whether Polygon has missed a rare development opportunity. While others appreciate Polygon's loyalty and commitment to Ethereum, after all, in this volatile crypto world, projects that remain true to their original intentions and are not swayed by profits are rare. Of course, whether this move is wise still needs to be validated through time.
Challenging the SEC's extraterritorial enforcement, Justin Sun stands defiant. Can Tron evade the intensified crackdown by U.S. regulation? He invisible behemoth in a bull market? Athena's stablecoin project sparks a market frenzy.
In March last year, the U.S. Securities and Exchange Commission (SEC) took Justin Sun, the founder of the public blockchain Tron, and the head of the HTX exchange, along with 3 related companies, to court. They were accused of offering and selling securities without registration and fraudulently manipulating the market, among other charges. Facing allegations, Justin Sun did not show concern, responding that the SEC had insufficient evidence. Recently, the case has seen new developments, and the legal battle between Justin Sun, Tron, and the SEC has officially commenced.
Last week, the Tron Foundation submitted a motion to dismiss the New York Federal Court, stating that the U.S. SEC is not a global regulatory authority and has no jurisdiction over Tron's sale of digital assets to foreign buyers on global platforms. Therefore, it requires the court to approve the dismissal of the SEC's lawsuit. Tron refutes the SEC's accusations against Justin Sun, stating that there are no specific facts indicating that these transactions are wash trades, nor does it imply that they were executed improperly for illegal purposes, let alone affecting any U.S. residents. Additionally, the sale of Tron tokens is entirely overseas, and measures have been taken to avoid the U.S. market, even if the SEC has the authority to do so. Tron tokens should not be classified as investment contracts under U.S. securities law.
I feel peace since we didn't do anything wrong, right? So and also, like I said, we doesn't just operate in United States.
Although Justin Sun's reputation in the crypto community is mixed, I genuinely support Tron and our brother Sun in this matter. The crypto community has become accustomed to the SEC's habit of biting everyone it sees. For a U.S. regulatory body, it's problematic to extend its regulatory reach so far but they are not operating in the United States. Since the problem, it needs to be addressed. Thus, all cryptocurrency exchanges that have had disputes with the SEC are not accommodating this issue. Ripple's lawsuit has been ongoing for 4 years and continues. Coinbase is once again in court with the SEC, and Binance needs no further mention. Going forward, the paths of encryption for Brother Sun and Tron will surely be fraught with difficulties. Facing the crackdown from SEC, which holds a negative attitude towards cryptocurrencies, and possibly further regulatory and enforcement actions from the Justice Department against the money laundering, Brother Sun, you must hold on. Amid the grandeur and tumult of the crypto world, there always exists a group of innovators daring to challenge the status quo and forge a new epoch. Today, we spotlight such a groundbreaking project, Ethena. This synthetic dollar protocol on Ethereum is not only introducing a novel stablecoin solution to the crypto market, but also plays a major role as a bear in a bull market, driving countless investors into a frenzy. Ethena is a stablecoin project invested in by Arthur Hayes, the founder of BitMEX Exchange, and a new project launched on Launchpool. Having accumulated over $1.5 billion in assets within 3 months of its launch, it has truly been a bolt from the blue. So what sets it apart?
Ethena Labs uses Ethereum as the underlying assets target. When users inject a certain amount of Ethereum assets into the protocol, the platform will mint corresponding value of USDE stablecoin assets. To ensure that the value of USDE remains stable at around $1, the platform has introduced a special mechanism. When the price of Ethereum rises, the platform's held Ethereum appreciates, but its inverse perpetual contracts incur losses. Conversely, when the price of Ethereum falls, the held Ethereum incurs losses, but its inverse perpetual contracts generate profits.
The philosophy behind Ethena's existence is based on the crypto world's strong demand for stablecoins. Hence, the newly issued stablecoin asset is bound to be warmly welcomed by the market. The growth in TVL during this period and the anticipation from Binance Launchpool event have already been confirmed, showing everyone's fear yet anticipation for stablecoin synthetic assets. In a market trend that continues to be bullish, issuing stablecoins as a main motive is certainly positive. But if the platform is more profit-oriented, trying to skim off the already tight Ethereum DeFi protocols while also maximizing trading strategy profits, the challenge will be significantly in the current unstable trading market.
Gamma Swap, a structured product in the Arbitrum ecosystem DeFi, announced on Platform X that it has launched Base. It is claimed that Gamma Swap enables traders to obtain perpetual leverage on any token through V2 type pools without the need for oracles. Airpuff, a protocol for airdrop yield, has formed a partnership with the multi-chain liquidity staking platform CalDAO. Users can enjoy leverage of up to 15 times on RS Ethereum and can earn doubled Cal miles and agent layer points. Cetus, a DEX in the SU ecosystem, announced on Platform X that its cumulative trading volume has exceeded $5 billion. Within 15 days, the total trading volume increased by $1 billion. And Cetus has maintained a weekly trading volume of over $400 million for 3 consecutive weeks. OpenSea announced on Platform X that it now supports partial token bridging and exchange features, allowing users to seamlessly transfer assets between 7 chains including Ethereum, Arbitrum, Base, Optimism, Zora, and Polygon. OpenAI recently announced that it will allow users to directly access ChatGPT without the need to register for the service. OpenAI will enable over 100 million users from 185 countries and regions to use ChatGPT to learn new things, find creative inspiration, and get answers to their questions.
Arrogance is human nature, and we often overestimate our abilities for trading. For instance, the user positions the ability to endure losses, control over trading frequencies, and mastery over multiple varieties, among others. Being a bit arrogant in other matters might only lead to minor mistakes, but overestimating your abilities in trading will lead to direct losses from the market. The destructive power of such arrogance in trading is truly significant. It's better to be humble and cautious, earning less with smaller positions than to lose money due to arrogance. I always remind everyone to invest only surplus funds, meaning funds that, if lost entirely, would not affect your daily life. Alright, so today that's the main content for today's program. If you find our channel valuable, we welcome you to share and follow us. You can also become a member. Click the top right corner to see our membership benefits. Our channel focuses on curating valuable news from the crypto industry, blockchain, and mining sectors, offering news from Monday to Friday and in-depth reports over the weekend. You can get our wealth code from Monday to Friday, as well as articles from our special authors. Let us grow wealthy together. See you tomorrow.